If you're looking to buy a small business, but you are not a financial wizard, maybe you are a chef and you want to buy a restaurant, or you are a very skilled hairstylist and you want to buy a salon, but you don't feel real comfortable on the financial side of things. Maybe you're a little concerned about what red flags might be showing up in the seller's financials, but you don't really even know where to look or what questions to even ask. Well, what you really need is called a quality of earnings report. So this is a standardized report that is often offered by due diligence providers in the process of helping somebody buy a small business. The problem with a quality of earnings report is that it can be really expensive. So I talked to an industry expert who works with a lot of different quality of earnings report providers, and he said that the average pricing is between $5,000 and $15,000 for a quality of earnings light, so the basic service, and then a standard quality of earnings report is from $15,000 to $35,000. So, if you're buying a local salon for, say, $300,000, it doesn't make a whole lot of sense to spend 10% of the entire purchase price on a quality of earnings report just to get an understanding of whether the financials are reasonable or not. And so I think what a lot of people do when they're buying a business for less than $1 million, they're just going to bypass the quality of earnings report altogether. They're just not going to do it. And it's reasonable in the sense that you just can't afford to do that on a smaller transaction, but there's a lot of risk in that. You may not be fully understanding or seeing some of the red flags that maybe a good quality of earnings report could provide. The other problem with a quality of earnings report is that in order to be able to get the data from the seller, the financial information that's really detailed that you need to do a report like this, you're going to need to already make an offer to buy the business. You're going to need to likely provide a letter of intent to purchase the business. And in that letter of intent, you're likely going to need to name a purchase price and really make an offer to buy the business. At that point, the seller would probably provide you that additional financial detail that you would need in order to actually produce one of these reports or have your due diligence provider produce one of these quality of earnings reports. But my thought with this is that how do I even know whether I want to make an offer on the business? How do I know whether the price is reasonable? How do I know whether I can get financing for the deal? Like, can I get an SBA loan for this deal to help me purchase the business? Does the business financials meet industry standards or follow industry norms or something out of whack? How do I don't want to make an offer on a business before I know those things, right? And so I think there needs to be something a little bit different than a full quality of earnings report in a lot of situations. So at ProjectionHub, we've been helping small business buyers create financial projections for their acquisition for really almost a decade now. And I also spent over 10 years as an SBA lender. And so based on my experience on the projection side, as well as SBA lending side, I put my head together with Grace Cisna, who is our in-house CPA here at ProjectionHub, and we tried to come up with a product offering or service offering really to help solve this problem. So we're calling it the Quality of Earnings Sniff Test. So the idea here is to provide a very basic financial analysis, a sniff test, for folks who are buying a small business and they just want another set of eyes on the deal. So the service is not really to replace a full quality of earnings report, but it can help you determine whether you should even take the next step. Should you even make an offer to purchase? Or maybe you're a very small business and it just doesn't make sense to spend $30,000 on a report. And so our quality of earnings sniff test can be better than nothing. At least you have some analysis done. And our goal with this offering is to create a service that was $1,000 or less. So 1/30th the cost of like a full $30,000 report, but provide you with what we hope is about 90% of the value of a full quality of earnings report. And we want to do it in a 2 business day turnaround. So here's what our sniff test will deliver. We're going to do a revenue analysis. We're going to analyze the revenue of the business and highlight things like whether it's growing or shrinking, whether the revenue seems reasonable for the business and the industry and the location and the number of employees that the business has, and just, again, give you a sniff test on the revenue side. We're going to do an industry comparison. So we'll take the seller's financials and we're going to compare it to industry averages. We have access to, and we have analyzed IRS data, tax return data from the IRS to produce industry averages for about 70 different industries. So we could tell you typical restaurant spends 4% of revenue on rent. And so if we see that the seller spends 12% on rent, we're going to point that out and raise that red flag. We're going to do a financing analysis. So we'll take the seller's financials and we'll apply your expected growth rates and help you determine whether the projections support the ability to get an SBA loan. So for example, and you can actually see this here in the report here, this debt service coverage ratio. So the SBA is, and your or whoever your lender is likely to have some sort of debt service coverage ratio requirement. And a lot of times that's 1.25, which means you need to have $1.25 of profit for every dollar of loan payments that you're going to have. And so let's say you want to buy the business for $1 million, and based on that debt amount, you expect to have $100,000 worth of debt payments every year. That means you're going to need $125,000 worth of profit every year to be able to meet that debt service coverage ratio. So we'll analyze the financials. We'll determine whether the business can support and cash flow that proposed amount of debt. And if you're not going to be able to get an SBA loan, you're going to need to either raise investment, maybe finance the deal with a seller note, or lower the purchase price. So if you lower the purchase price and lower the amount of debt, then maybe the business can cash flow and meet that debt service coverage ratio. So we're going to help you figure that out. We're also going to look at a valuation just from a very high level. So we're not going to do a formal valuation or appraisal, but Buy-Sell is one of the most popular business listing platforms, and they help sell 10,000 businesses a year on average. And they publish data on earnings multiples and revenue multiples for the businesses that have been sold. So they might say, okay, for auto repair shop, on average, buyers are paying 3 times earnings. So if earnings or profit was 100,000, then on average, people are paying 300,000 as a purchase price to buy a $100,000 earning or profitable business. So we'll be able to compare the seller's financials and their asking price compared to industry averages. And then finally, we're going to come up with a big list of questions for the seller. Now, you might not be able to get all those questions answered by the seller until you decide whether to make a formal offer. At that point, then you can probably ask as many questions as you want. But during that phase before you've actually made an offer, you may not be able to get answers to all these questions yet. What we're trying to do with this offering, though, is point out, here's some things we think you should look at. Here's some things that if it were us, this is what we'd be concerned about, and areas that you want to clarify with the seller. So again, this is not a full quality of earnings report. We'd still encourage you, in many cases, it can make a lot of sense. If you're going to buy a business for $1 million, spending $30,000 on a full report to really understand whether the financials make sense and really dig into the details, I think that can make a lot of sense many times. So that's not what we're trying to do. We don't offer that service. What we're trying to do is just be real practical on the front end before you even get to that point. Can we do a quick sniff test to help you determine whether you should continue to pursue this business? So if that sounds useful to you, you can simply reach out to us at support@ProjectionHub.com or go to the link in the description of the video below to start the process. And now I'm just going to show you real quick the deliverable in the spreadsheet here that we'll use. So this is just an example of our sniff test summary. So we'll have this written summary. We'll have a 3-year cash flow projection for you based on the seller's historical financials, and then using your growth rates that you expect to project that out into the future. And we're also going to show you what your projected debt service coverage ratio is and how much cash we think the business can generate after paying debt service. So this kind of gives you an idea of how much you could earn as the owner. To be able to produce the report, we're going to have a few different tabs that we're going to fill out. We're going to do all of this for you. So we'll enter in that the seller's asking price, how much you have cash available to invest in the deal, what you think the interest rate on the debt, if you're going to use debt, what the term is, how many months the loan term would be, and then how much do you hope to earn from the business. We're going to help you determine whether that seems possible with this model. So we'll also look at the historical financials of the seller. And we just have some example data in here for assuming this is a nursing home that we're buying. And we can look at what the room revenue would look like and tell you whether that seems to make sense based on the size of the facility and the number of beds. We'll also allow you to put in an expected growth rate for the future, and that will be what we use to help create the future 3-year projections. On the expense side, we'll have a little bit of work to do to standardize the expenses so that we can compare it to the industry averages. But once we fill all this out for you, what we'll be able to do is you'll notice, okay, here the seller is paying nearly 5% for insurance, and the industry average is just under 2%. So maybe that's something that we should ask the seller about. Why is insurance so high? So that's an example of something that we would point out. You'll also be able to input your projected expenses going forward. So it could be that once you buy the business, some of the expenses will go away, or you may have increased expenses in certain areas. And so we'll ask you questions about that and be able to input these predicted expenses for you going forward. And that'll produce a projected cash flow statement for you. And then this little final tab will just allow you to understand how much cash you actually need for the acquisition. So we'll help determine how much working capital we think you're going to need based on the specific business, what the purchase price is, what your closing costs will be, any new kind of upfront costs that you're going to have. All of that kind of adds up to what the total cash need is. We know that you have $250,000 in this example to put into the deal. That means you're going to need to borrow $3.1 million. Let's say we're going to have $1 million of that as a seller note with certain terms on the seller note. And then that leaves us with how much we're going to need for a bank loan or maybe an SBA loan. And then that ultimately will allow us to check this debt service coverage ratio requirements and determine whether we think the deal can cash flow for an SBA loan. So that's the overarching process. If you have any questions about that, again, please don't hesitate to reach out at support@projectionhub.com, or feel free to go to the description of this video below. Click a link there to start the process with us on your report. We'd be happy to help. Thanks.